Welcome back. Let's bring in our panel to tee up the trading day ahead. Cameron Dawson is New Edge Wealth. Terry Haynes is of Pangea Policy Advisory, and Jan Kniffen is J. Rogers Kniffen Worldwide. We only have a couple minutes here. We're going to get as much in as quickly as we can. We're going to do lightning round style. Jan, I'm going to start with you. The week that was in the consumer space. What are we seeing? What is it signaling?
I thought it was fine. Almost everybody beat. And the consumer's strong, and 2026 is going to be fine, and inflation's falling, and the consumer's got a job, and they're spending, and I don't think we're going to have a problem with the consumer in 2026. I don't think we had a problem with them in 2025. The low end still dead, but when you're looking at the rest of the consumer space, I'm thrilled with the upper end, and I'm pretty good with the aspirational space, and even like when you get a little lower than that, we're seeing pretty good numbers out of Walmart and Ross Stores and TJ Maxx and all the people that are dealing with that more strained customer.
Yeah, and of course we're going to get Target and Costco and some others next week. So the reads on the consumer will continue. Cameron Dawson, I want to get your thoughts on what we're seeing in the market right now, given the fact that it is highly bifurcated between tech and everything else.
Yeah, we've seen this relative calm on the surface, but that really belies the chop and churn underneath. And we can see that through record dispersion between winners and losers, meaning the difference between those doing really well, like an energy up over 23% year to date, is much better than what we're seeing out of things like consumer discretionary or financials and certainly tech. And so the big question is, what do we take as a read from this market? Because we have some cyclical areas doing well, like industrials, but other cyclicals like financials and discretionary not doing well as rallies and things like staples. We'd also look to the fact that you have the 10-year Treasury sub 4% and ask the question, what does that say about risk appetite and the optimism about growth? Yeah,
and of course we're seeing that put pressure in a positive way, Terry, on mortgage rates, with the 30-year fixed now below 6% here. So we'll see what that does to housing, which kind of takes us back to this broader affordability conversation as well. There had been expectation that maybe we would get another reconciliation bill floated with State of the Union this week. It didn't happen, but what is the policy push that you're focused on here as 2026 unfolds?
Well, firstly, I've been talking about the likelihood of reconciliation for quite a while. I think that still happens by July the 4th. The president's talking about a new round of personal and corporate tax cuts, and the people that have been in charge of that in the Congress, the Budget Committee chairs, Lindsey Graham and the like, have been talking about it for a while, so I think you get it. On top of that, I think they talked plenty about affordability in the State of the Union. I don't think you've heard the compelling thread yet, but then they're going to spend the next few months throwing spaghetti up against the wall to see what sticks and figure out the message by summer, which is really when voters are going to start paying attention anyway. On the Democrats still haven't figured out what their affordability message is, by the way, and say so in their retreat this week.
Yeah, it's a key point. And of course, we know tax season is going to be a tailwind for the consumer, Jan. But here's the other piece of it, and it is the AI labor market disruption debate piece of it. I want to pull this up because Block's CEO Jack Dorsey had this to say with the layoffs that they announced last night. They basically said the tools that, okay, let's pull this back down so I can read it. But basically saying intelligence tools have changed what it means to build and run a company. A significantly smaller team using the tools we're building can do more and do it better. And he thinks that other companies are going to follow suit within the next year here. We're looking at labor data next week, but what does this mean in terms of the uncertainty we're seeing in some of the macro reads on the consumer?
Well, when you look at the consumer and you look at AI, Walmart has already told us they're going to grow for the next 5 years at the same pace they've been growing with no more people. And it's because of AI. They're the most advanced in retailing. So if I just look at my little world of retail, we're going to see a lot less requirement for human beings in the process due to AI. That should ripple across the whole economy from the point of view of other people that work. And so we are going to see something happen there. But since I'm a huge believer in the future, and I've read all of Ian M. Banks' Culture Series books on what AI is going to do, the same as Jeff Bezos and our good friend, we're going to see something change a lot.
Okay.
But in retailing in particular, we're going to see less need to spend money on people and more capital.